In this video, I'm going to talk about how accounting systems work. So we're going to talk about accounting systems in this video, or what is often called bookkeeping. Now this is, I have my notes for this video because we're going to cover a lot of information in a very short amount of time. But this is so important for you to understand. It's extremely important because basically all accounting systems out there are based on the same central concepts. So if you understand the information I'm going to present in this video, it'll really help you in your business no matter what business you're in. So what is bookkeeping? Bookkeeping is the process of recording transactions in an accounting system. Now, in the old days, accountants used to do bookkeeping completely manually, so with paper and pencil. And so the process that I'm going to describe, they used to do this all by hand and keep massive amounts of records. Now, in today's world, of course, this is all done on computer, but the same concepts are there. They just keep it in this massive computer database. So what I'd like to do is I'd like to start describing the problem that accounting systems solve. So imagine for a moment that you're owning and you're operating a business and you don't have an accountant and you don't have a financial system. What is the problem you're going to experience? Well, without an accounting system, you only have two pieces of financial information to understand what's going on in your business. And those two things are your bank account balance and your bank statements. So you can go to your bank and you can ask them what your account balance is, and you get your bank statements every month. And your bank statements are, multiple pages long, and it's just this list of hundreds of transactions. So you can look at those transactions, but the problem is there's some information that your bank statements don't tell you that is essential for running your business. Some things that you don't know is you don't know the profit or loss of your business. You also don't know how much debt you have. You can't figure those things out by just scanning bank statements. So what you do is you use an accounting system. And so I'm going to go through the process of what an accounting system does. And at the start of the process, all accounting systems start with an economic transaction. Now, an economic transaction could be a purchase, it could be a sale, it could be a transfer of money, it could be the acquisition of debt. But there is some event that happens, and that's your economic transaction, and that's the place where you start. So the first step in your accounting system is your accountant is going to look at that economic transaction and they're going to record it using a journal entry. Now a journal entry is written out with a debit and a credit, and it identifies the account that's affected and the dollar amount that's affected. So you're recording your economic transaction, and you're always going to use a balanced debit and credit side. And so the example that I put here on the slide is you making a sale. And so what you'll have in a sale is you'll debit cash and you'll credit revenue. And here we've debited cash for $500 and we've credited revenue for $500. And you can see that your debits equal your credits. Now, a journal entry can have multiple debits and multiple credits, but your debit side and your credit side will always balance out. So that's the journal entry. Now, the next step in your accounting system is your account ledgers. And so journal entries are transferred to the ledgers of the accounts that are affected. And so you can represent your account ledgers using a T account. And the T account, there's one for each different account, and there's a debit side and a credit side. And so here you can see your cash T account, and I put the $500 debit from the journal into the T account. And so the cool thing with ledgers is that it always allows you to know the total of what's in each account. You can look at the T account and all the transactions that have affected it, and you can either add or subtract up to get the total amount that's in that account. So the next step in the accounting system is your trial balance. And so what you do is you take your information from your account ledgers and you transfer that to your trial balance. And the trial balance is a report that merely lists out each account in your business and how much was affected in that account. And the accounts in your trial balance are always in the following order. You start with assets, then liabilities, then owner's equity, then revenues, and finally expenses. And the cool thing with the trial balance is that your debits always equal your credits because it goes back to the original journal entry where your debits equals your credits. So all the way through your process, your debits will equal your credits. And you can see that on your trial balance. Now the final step in the process of your accounting system is generating your financial statements. And you use your trial balance to create those financial statements. And you can see here on the slide you have your balance sheet, which follows the equation assets equals liabilities plus owner's equity, and you have your income statement, which follows the equation revenue minus expenses equals net income. So that's kind of the whole accounting system process. And to just review, we started with your economic transaction. That turned into the journal entry. Your journal entry turns into your account ledgers. Your account ledger turns into your trial balance, and your trial balance turns into your financial statements. Now, it seems like that's a lot of work, and it is. It is a lot of work, but there's a number of reasons why we do this. Number one, it's extremely organized. It keeps your accounts extremely organized. Not only that, it provides you useful financial information. So the problem we discussed before when you just had your bank transactions from your bank statements is, now you know your profit and loss, and now you know how much debt you have by just looking at your financial statements. And you have confidence that those financial statements are accurate because it creates an audit trail, and you can trace and vouch back and forth between the economic transaction all the way through to your financial statements. And so when you look at those dollar amount that's on that financial statements, you know where it came from. So there's a number of reasons of why this accounting system set up this way is so beneficial to businesses. But ultimately, there's an even more important reason why we do all of this. Really, the benefit of an accounting system is that you're taking the chaos of random activities and you're communicating them in a formalized and easy to understand report. So, in a business, you might have hundreds and thousands of economic transactions, and really it's quite amazing to be able to look at a one-page financial report and instantly understand what's happening in that business. That's really a pretty cool thing. And what's happening in life is that we're all walking around with this set of financial statements that represent us. So financial statements, businesses have financial statements, individuals have financial statements, and so when we're interacting with each other, we can use these financial statements to understand the other party's level of productivity. Because financial statements tell us a bunch of things. They tell us how much money you make, how much money you have, how much debt you have, how productive you are. And so you can use this information to make business decisions on who you want to do business with, and who you want to sell to, and who you want to buy from, and who you want to lend money to, and who you want to invest in. And so all of this is possible because of accounting systems. This is how accounting systems work. And it's really pretty cool that our society has invented and developed this way to communicate with each other. And so that's what accounting systems do, and that's what accountants do. So that's my overall summary of how accounting systems work. If you liked it, leave a comment down below letting me know. And if you liked the video, please subscribe. I release a new video every week on accounting, on business, on corporate finance, so definitely come back next week and check out that video.